today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Liquidity is fine if you don't count the things we can't sell. Inflation is transitory, like that relative who's been staying with you for 6 months. Deficits don't matter until they do, and then they matter all at once. If you can't convince them with logic, show them a chart. The Fed's strategy is clear: confuse everyone equally.
India's debt map tells a fairly interesting story, with a twist. The most indebted households in India are also among the most prosperous ones. According to MOSPI, Andhra Pradesh, Telangana, Kerala, Tamil Nadu, and Karnataka top the household debt charts, with Andhra leading at a hefty 43.7%. Meanwhile, Delhi sits at the other end with just 3.4%, not because it's frugal, but because prosperity there doesn't rely on borrowing, perhaps. In the south, higher incomes and better access to credit means families can take larger loans and, more importantly, repay them. So, yes, they owe more, but it's a good kind of debt, the kind banks actually smile at. India's Diwali boom. India just had its most dazzling Diwali yet, and not just in fireworks. Festival sales hit a record 5.4 trillion rupees, up 25% from last year, even before counting another 65,000 crores in services. So what fueled this? A mix of GST2 rate cuts, Swadeshi Diwali sentiment, and a consumer base clearly in the mood to upgrade everything. From FMCG and jewelry to home decor and cars, shoppers spent like it was GDP's birthday. Auto sales alone jumped 15 to 35%, with Maruti and Tata posting record deliveries. Even Hyundai was selling cars faster than astrologers could find auspicious dates. India's economy may be sprinting ahead, but its mutual fund investors are still stretching at the starting line. The mutual funds to GDP ratio, basically how much of the economy is parked in mutual funds, stands at just 21%. Compare that with Brazil, which is at 80%, and the US, which is at 107%. And India suddenly looks like it's still filling out the KYC form. Yes, assets under management have hit a massive 74 lakh crores, powered by SIPs and digital access. But for every 100 rupees in GDP, only rupees 21 makes it into funds. Valuations are back above long-term averages, which sounds great, unless you remember that gravity works in finance too. The Nifty 50 trades at around 21x forward earnings, mid caps at 28x, and small caps near 25x. Numbers that would make even a bull blush. The winners this season: autos, banks, pharma, and cement, doing the heavy lifting. The laggards, IT and real estate, both taking a nap after last year's excitement. Foreign investors are finally buying again after last year's sell-off, but experts warn, don't mistake liquidity for conviction. Here's a twist that nobody saw coming. Rural India has been shopping faster than the cities. Over the last decade, monthly rural spending has nearly tripled, from rupees 1,400 in 2012 to over 4,100 rupees in 2024. Urban spending still leads at about 7,000 rupees, but the gap has narrowed sharply, from 84% higher a decade ago to just about 70% now. And it's not just about buying rice and dal anymore. Rural households are spending less on food, more on aspirational goods. Think phones, appliances, fashion, and not just farm tools. Get ready for a blockbuster IPO season. 10 companies are lining up to raise over 40,000 crores from investors who still believe listing day is the new Diwali. Leading the charge is ICICI Prudential AMC at 9,000 crores, followed by Billion Brains, Garage Ventures, and Lenskart, both aiming for around 6,000 to 6,500 crores. Then there's PhysicsWallah, proving once again that teaching online can just be as lucrative as running a bank. Names like Pine Labs, Boat, and Prestige Hospitality round out a mix that's as diverse as India's startup scene itself. In 2026, the world economy will touch a staggering $124 trillion, but one country still rules the scoreboard: the United States, with a projected GDP of $31.8 trillion. That's more than China, Germany, and India combined, or as economists call it, the reason the dollar still sleeps well at night. China follows at $20.7 trillion, still massive but slowing, India climbs to 4.5 trillion, keeping its growth crown, and Japan holds on with $4.5 trillion too, mostly out of habit. Why everyone's on YouTube and why you should be too. If your video content isn't on YouTube, you're basically hosting a concert in an empty hall. YouTube dominates India's video market with 441 million users. That's more than the next four platforms combined. OTT giants like Netflix and Prime Video are tightening budgets, but YouTube's open stage keeps expanding. 100 million Indian channels uploaded content last year alone. It's not just reach, it's also the reward. YouTube paid creators over 21,000 crores in 3 years, and 15,000 Indian channels now have over a million subscribers.